Beautiful traders, what is going on? It's your boy Adrian back with another video. And in this video, we're gonna go over market structure. We're gonna look at how to read market structure. What is market structure? Identify higher highs, higher lows, lower highs and lower lows. What is an uptrend, downtrend, consolidation? We're gonna look at all of that. Because here's the thing, if you have no idea how to read market structure, there is absolutely zero chance of you succeeding in this Forex thing. So stay tuned. Let's go over a few things. I'm gonna share some concepts with you, and then we're gonna go through on the charts and actually show you some real life examples. All right, stay tuned. Let's check this out. All right, traders. So here we are. As I said, we're gonna go over a few concepts first, and then we're gonna look at some examples on the chart. Okay, so let's look at what market structure is. So with market structure, first of all, it is, it is what allows us as retail traders to understand whether or not we are in an uptrend, downtrend, when we're to place a buy and also to exit a trade, right? I'm not gonna cover, essentially entries or exit points. I'm merely gonna focus on the different trends in the market in terms of structure and the phases as well. Right? So there are three trends in a market. There's an uptrend. Now, an uptrend consists of higher highs and higher lows. There's a downtrend, consists of lower lows and lower highs. And there is consolidation. Now, consolidation, there are no higher highs, no lower lows, things of that nature. It's just equal highs and equal lows. Basically, the market is moving sideways, right? Now, when the market is moving sideways, you want to essentially take your hands and just sit on your hands and do absolutely nothing. That is the perfect time to just, essentially wait for your move. Don't place any trades, right? You only want to really and truly place trades when the market is trending, especially when you're just first starting out. In the uptrend and downtrend, there are three phases. There's an impulse, correction, and continuation. Again, in these two phases, the uptrend and downtrend, there's an impulse, correction, and continuation. So let's take a look at that more in depthly. Okay, so here we are on a downtrend. So on a downtrend, as I mentioned, there are lower lows and lower highs, okay? So let's start at this point right here. Let's say this is our starting point. So this is a high point, okay? From here, we have a low point, another high point, low, high, and a low. So let's start over. We have our high point, we have a lower low, a lower high. Why is this a lower high? Because this point is lower than this high. We have a lower low. This point here is lower than this low. Lower high and onward, right? Now, in this trend, we have what's called an impulse, correction, and continuation, three phases. And it's simply right here. So here's the impulse down to this lower low. Here's the correction up to the higher high right in here, and then the continuation. And then all of that repeats. So impulse, correction, continuation, right? So that is our downtrend, okay? Let's take a look at our uptrend. So in an uptrend, you have a higher high, higher low, higher high, higher low. And let's say this is our starting point. From a low point here. From the low point, we move up higher to our higher high, then to our higher low, higher high, higher low, so on and so forth. And again, the three phases in here, we have our impulse up to the higher high, then a correction to our our higher low, then a continuation up to our higher high. So impulse, correction, continuation. So that's our uptrend, where we identified our higher highs and higher lows, and in that, our impulse, correction, and continuation. Now, lastly, let's cover the consolidation. Now, as we can see here with consolidation, as I mentioned, there are no higher highs, higher lows, lower highs, anything of that nature. It is simply the market moving sideways, equal highs and equal lows. There's no real true direction in the market, right? So that's when the market is consolidating. Now in an uptrend and downtrend, especially if you're someone who likes to, get into trades in a trending market, those are the ideal times to place trades, uptrend, downtrend. In a consolidation, unless you understand minor structure, which I can cover in a different video, you can capitalize on trades in a consolidating market, right? But for now, consolidation, moving sideways, especially when you're just first learning this, stay away from it, right? Cool. So those are the 3 trends in the market, right? So let's take a look at some examples on the actual chart. Okay, so here we are. For this, we're going to jump on to the 1 hour chart. I believe that has, the best amount of detail to really identify. You can use any time frame. You can go to the daily, right? And identify, here's your downtrend, here's your uptrend, down, up, right? You can classify this right here as a little bit of consolidate, actually not even there. Right here as your consolidation. There's no real direction, if you will, right? But let's move down to the 1 hour, okay? So right off the bat, I can tell that this is an uptrend. Why? If we use this as our starting point right here, okay, we have a higher high, have a higher low, higher high, higher low, higher high, consolidation right in here. See how the market is just moving sideways? I only wanted to focus on, let's move it right here, on uptrend, but right in here we have consolidation, right? So I just highlighted consolidation in this box right in here. But again, this is our uptrend with the higher high, higher low, higher high, higher low, higher high, consolidation, higher high, higher low, so on and so forth, right? Now in here we have our, I'll break it down. We have our impulse right in here, correction, continuation, right? That's the actual impulse leg right here. The market corrects itself right here and then continues up, right? So that's our actual, 3 phases in that trend, right? Let's look for another example. I want to focus mainly on uptrend in here. So again, here's another example of an uptrend. Let's say right here is our starting point. Here's the low point right here. So we have our high, higher low, higher high, higher low, higher high, low, higher high, higher low, higher high, higher low. Okay, so on and so forth all the way up. Okay, now in terms of the 3 phases, let's break it down. We have our impulse. Let's go right here. Have our correction, continuation, right? Right in there like that, right? So again, we have our starting point, low, higher high, higher low, higher high, higher low, higher high, right? We have our impulse, correction, continuation, okay? So that's our uptrend. Now, let's look at our downtrend and how to identify that on the actual chart right here. So let's say this is our starting point. Again, here's our downtrend, okay? We have our high, our starting point. We have a low, then a lower high. Because again, this high is lower than this high. Lower low, this low is lower than this low, okay? Lower high, lower low, lower high. We'll just go low, lower high, lower low, okay? In that there, we have our, I'll break it down. We have our impulsive leg down, correction, continuation, right? This whole leg right here is the impulsive leg down. Then you have the corrective leg, this whole move right in here. That whole move right in there is the corrective leg, and then the continuation down from this leg here. okay? Pretty simple, pretty straightforward. At first, it may not come together for you. I want you to, go over this video several times, jot down some notes, and really practice on your own so that way you can fully understand, right? Let's look at another example on a downtrend. Here's a beautiful downtrend. Nice, beautiful, right? So again, here is, let's say this is our starting point right here, okay? Here is our high. We're going to classify this right here as our low, then our, lower high, because this high is lower than here. We have a lower low, lower high, lower low, and then we actually transition into a slight uptrend right here, and then move down again back to the downtrend, okay? So we have our impulse, correction, continuation. This whole leg right here is the impulsive leg down, the corrective leg. And one thing to note, correction is also known as a pullback, right? It's also known as a pullback, okay? So we have that corrective leg and then the continuation, all right? Okay, beautiful, all right? So that is our downtrend. Now let's look at consolidation, okay? Consolidation, as I mentioned, it has no real true direction in the market. For instance, right in here, actually this whole thing right in here is considered consolidation. Why? Because there is no real true direction in the market. Everything is just sideways. It's very choppy, right? The actual movement is very choppy, right? It's very choppy. You know what I mean? Everything is up and down, up and down, up and down within this box. There's no real true movement, right? Whereas here you can identify right away, this is a downtrend, right? Look at the difference here. Consolidation in this box, and here's a downtrend, okay? Let's see what's left of this box. We have an uptrend to the left of this box, right in here, an uptrend, okay? Here's the uptrend. Consolidation, here's the downtrend. I just highlighted the 3 phases: impulse, correction, continuation for the downtrend, impulse, correction, continuation for the uptrend, consolidation, okay? Now, these are the 3 phases in the market, and these are the 3 trends in the market: uptrend, downtrend, consolidation, and impulse, correction, continuation, okay? Now, when you're able to actually identify this in the market, you will be better off. Now, the reason why I say this is, let's say, for instance, you're someone who loves to use indicators. Indicators are great as long as you can fully understand market structure. Indicators are pointless when you have no idea as to what is happening in the market. Yes, the indicator will say, for instance, price is moving this way, but do you, for instance, in an uptrend, but do you fully understand what that means? Being able to read the market, it will give you an advantage over other traders who are not able to read the market, right? One other thing that you can add, to help you read the market in terms of what trend you're in, you can use trend lines, right? On TradingView, you just go to the second drop down here, click the little arrow, click trend line. You can easily identify this as a downtrend right in here. For downtrends, you want to draw your trend line above price. And then for uptrends, you want to draw your trend line below price, like that right there, okay? Beautiful. Now, I hope that helps. If you have any questions or any comments, feel free to leave it in the comment or description box down below. And if I wasn't clear enough, let me know. I can always redo this video. This was my first time going over this, for an audience. I just more or less did it from my, from my thought process. And yeah, like this honestly, once I was able to master this helped me a ton, because I was able to identify when to place a trade and when to exit. Now, if you want more, knowledge on that, more content on that in terms of entries and exit, let me know. I can definitely do that up for you. Other than that, thanks so much for tuning in. If you haven't done so yet, please smash the like button. It's a proven scientific fact. The more times you smash the like button, the more times you're putting yourself in good hopes, high hopes to get that Lambo. Let's get that Lambo. But in all seriousness, thanks for tuning in. Smash the like button, comment, subscribe. And as I always say, your boy is out. Speak truth and speak life.